Good afternoon, everyone. This is James Gardino coming to you from Dividend Stock Talk. It is 3:30 on a Tuesday, June 6, 2017. We're going to jump right on in to what we're doing here. Dividend Stock Talk, we're basically going over investing with our dividend stocks, and we're looking for monthly and weekly cash flow. Right now, today, I'm going to go over some of the trades that we made yesterday. We had a very good recording yesterday. I was doing a little bit of sampling and trying to figure out what worked best. Okay, just so happened to have people come in the background making too much noise. So now I have to go in the back, edit all that stuff out. So today we're doing it live. So I'm hoping that the people around here have enough consideration to be quiet while I'm working. Anyway, let's jump on in and see what we're looking at. All right. We trade basically two accounts. One is involved with dividends and collecting the dividends and collecting the run-up coming up to the dividend. Because there's over 3,500 stocks every year, or this year in particular, that are paying a dividend. Now, I like to stick to only those that have increased their dividend payments to their investors consistently. Now, 10 years or more is what I'm looking for. So if a company's increased their dividend payment for 5 years, hey, great, that's fine and dandy. But what happens when push comes to shove? Are they still going to be able to increase their dividends? Is it going to be worth my while to put my hard-earned money into it? I don't know. So let's jump in and see what we're looking at this week. First thing we want to do is we're looking at, go back to the home screen so you know what we're looking at. Thinkorswim, this is what you usually come to when you log into your Thinkorswim. It gives you an idea of what's going on in the world. It gives you some idea, over here, upcoming events, kind of nice, neat, fun stuff. I really don't pay much attention to all that stuff. Maybe I should one of these days really get into it and find out what's going on in the world. But I'm a lazy trader. I just want my profits, and I just want to move on with my life because there's other things I'd rather be doing. All right, let's get out of there and just go to the market watch and see who's doing what this week. All right, today, like I said, is the 6th, and we always trade something 10 days in advance. So 10 days from today would be the 20th. Okay, so we're looking at stocks that are trading in the week of the 20th, which is right here, which is the 4th week of June. Now, let me clear this so we can see who is trading. Okay, this is all the companies that are trading this week. We get 15 on Monday. Let me quickly go over some of them so you see who they are. Seagate Technologies, Sabre Corporation, Pennant Park Investments, never heard of them. Pennant Park Floating Rate Capital, Gladstone Land Corporation, Car Auction Services, Gladstone Commercial Corporation, Gladstone Capital Corporation, Gladstone Investment Corporation. That's 3 different companies under the same name. That's kind of weird. Gladstone, it must be interesting. FS Investment Corporation, Eagle Materials, Meridian Bank Corp, Capitella Finance, Cincinnati Finance. Now, Cincinnati Finance, let me just stop right here for a second. Cincinnati Finance is a dividend king. It means they have increased their dividend every year for 50 years, for more than 50 years. And this is one of the companies I always invest in. However, we're looking at doing weekly options today, so I'm not really going to be doing anything with them today because next week is the monthly option because this is only the second Friday of the month. And Cincinnati Financial doesn't have weekly options. So I'm not really going to trade them this week. I'm going to look at those next week. Where were we? Okay, Cincinnati Financial and Apollo Investment Corporation. All right, Tuesday there's only 7 companies. Technicolor, Solar Capital, Las Vegas Sands Corporation, LTC Properties, Getty Realty Group, Federal Realty Investment Trust, Curtis Wright Corporation. Wednesdays is 13 companies. CBH, never even heard of them. Zimmer, Bone. The Toro Company, they make rototillers and lawnmowers and whatnot. Oxbridge Re Holdings, that's probably a real estate company, I don't know. Luminex Corporation, Kimball International, Flowserve Corporation, Conservice Corporation, CTS Corporation, don't even know these guys. Cabot Microelectronics, never heard of them. Chicago Bridge and Iron Works, okay, may have heard of them. Blue Rock Residential Growth Real Estate Investment Trust. American Capital Senior Floating, I'm assuming that's another investment fund. Advanced Auto Parts, almost a household name brand. I mean, you've seen the ads on TV. It's probably a good company. They're only offering a 6-cent dividend, which is not a lot, and they don't have weekly options. Okay, so Thursday we only got 3 companies. Retail Properties of America, Portland General Electric. Love utility companies. As long as they continue to increase their dividends and have a nice customer base, always a good investment. International Flavors and Fragrances. Wow. Now, I'm pretty sure that we've all sampled something that came from this company, but I've never really heard of it. Okay, Friday there's 8 companies. STM Microelectronics, Pro Assurance, Mercer International. Mercer, I've heard of them, but I'm not 100% sure exactly what they do. Uterine Location and Control, never heard of them. Gameco Investors, never heard of them. First Citizens Bank Shares, I'm assuming it's a bank company, I don't know. AC is Associated Capital Group. AAN, Aaron's Inc., never heard of them either. They're only offering a 2-cent dividend. Not really worth my while looking into them. Okay, so these are all the companies that are offering. Granted, there's not a lot, but there are some opportunities here. Now, like I said, this week we're going to look at only the weekly options because that's what we have. Because it's, like I said, it's the second week of the week, and this Friday will open up for next week. And next week, our monthly options expire on the Friday. So we're only looking at weeklies today. So let's quickly click on here. This is going to open up. We're going to go down to public where it says N through W and hit the weeklies. Now, unfortunately, this week there's only 3 companies to look at. STX, LDS, and CBI. Okay, so first let's take a look at STX. I already have it open, so let's reduce it and see where they are, what they're doing. Okay, so STX started out the year at 23, almost 24. She goes sideways for about a month and a half, and then in mid-July she jumps up to a trading range at 29, almost 30, keeps on going up, so it hits 32, and then goes sideways for a couple of months. She jumps up to another trading range between 36 and 40, travels about 6 months, and then right in the tail end of January, she jumps from 37 up to 43, and then travels sideways for a while, and now she makes this little gap down back here at the end of April, from 50 all the way down to 41. That's a big drop, but that's not what we're concerned of. We're concerned of what is it going to do in the next 3 or 4 days, because we want to get in, we want to get out, we want to make a little bit of a profit this week. All right, so I'm going to click on this right here. It's the chart style. Now that we know that it's been trading for over a month in this little range between 41 and 43. It's a tight little range, so it could give us a nice indication of where she's going to go. All right, I'm going to click on this little icon here, which shows the candlesticks. And this drop-down box is going to pop up. Click over here, standard, chart mode, and we want to drop down to the seasonality. We want to take a quick look at what the seasonality looks like. Now, the blue represents this year, and this year only. The red represents a conglomeration of all the years from the past, last year, the year before, the year before, the year before, so on and so forth. I want to find out what she's going to do in the next couple of days, or the next couple of weeks, and for the rest of the year. Because if I end up buying the stock, I want to get an idea of how long do I have to hold it before I can get out and get my profit. Okay, so here we are right now. I'm going to blow up this little section here. Now, this is where it is today. As you can see, the blue line, which it represents today, intersects right here, just before there's a little spike. And this is what I'm hoping for, because as you can conclude, I did buy some of these yesterday, that it looks like it's going to spike up for a little bit for the next couple of days, and that's what I want. I want it to spike up for a little bit and just enough for me to get in, get out, and get a little bit of a profit. Other than that, if we end up buying it and hold it for a couple of months, it's going to hypothetically move up because you get the dividend coming up in the next 10 days. So let's see where we are on STX. Now let's get back to the regular chart so you can see where we are right at this moment in time. Back to the standard chart. Now, as you can see, we're down here at 41.74. STX, let's open up the trade and see what we did yesterday. We're looking at the 41.5 and the 42. So now we bought this yesterday, and the stock was closed right at 42.08. Okay, so we kind of wanted to make sure that we had a couple of ways for this thing to go. Because we want to make money if the stock goes up, we want to make money if the stock stays the same, and we want to give it a little bit of room so she can go down a little bit and we can still make the money that we're looking for. Now this one, we're looking at a 35% profit potential, and there's a good chance that we might be able to do that if she stays above 42. At the moment, she's at 41.76, which, as you can see, drops below the 1 month average, because it basically hasn't closed below 42 in over a month. See that line right there? This is where she closed, right there. So she hasn't closed. Today's the first day it's gone below 42. I mean, well, not really, because it went below 42 here and it went below 42 here, but it didn't stay there because it went back up and it closed. So it hasn't closed below 42 in over a month. Well, let's isolate this a little bit and go back a couple of months, see what we're looking at. Okay, so here's where we are now. It looks like it's a little trading range of 41 to 43. Now, 42 is right in there. It's not the high of the year and it's not the low of the year. It's somewhere right in the middle. Now it has its dividend coming up, and this thing has a tendency to go up coming into the dividend, and that's what we're looking for. So with that said, just for the fun of it, let's make another trade. She's at 41.70, so let's go to 41.5. STX. Okay, it's at 41.77. What is the 41.5 looking like? Okay, this is a good example. This is what I look for. Okay, now let's disregard the 50 contracts we did yesterday. Okay, let's do another 50 contracts today. Okay, we're going to do 50 contracts. The 41.5 debit spread. Okay, it's a debit and it's a spread because the difference between 41 and 41.5. It's a spread. It's a 50-cent difference between the two. So as long as the stock stays above 41.50, I will make the difference between the 50 cents that it's worth and the 36 cents that it's costing me. Give you a better idea. Let's quickly look at this. All right. The 50 contracts are going to cost me $1,800. See, the order description, that's what it is. The break even, I'll get that in a second. The maximum profit, we're going to get to that in a second also. The maximum loss, I'm going to get to that also. The cost of the trade, the buying effect, result, blah, 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 all that kind of fun stuff. All right, what we're looking at is the cost of the trade, including commissions. To do this trade, it's going to cost me $1,800 plus $82 in commissions alone. The most money, the most I can lose is the $1,800 and the $1,881. Don't let them fool you. If you lose the money, you can lose the commission too, because you have to dish that out. So the most money I'm going to lose is $1,881 or $1,882. The most money I can make, no matter what happens to the stock, if it goes through the roof, drops to the, well, as long as it stays above the 41.5, the most I can make is $700. However, $700 is not a lot of money. Neither is $1,800 a lot. But what percentage is 700 of 18? It's a little bit less than half, so it's somewhere around 41, 42%. Now we got 3 days left. We got Wednesday, Thursday, Friday, because it expires on Friday. Now this trade is potential of 41 or 42% winner. As long as it stays above 41.5. See where she is right now? She's at 41.78. 41.5 is right down here. And this thing hasn't seen 41.5. Oh, we gotta get out of here for a second. Okay. This thing hasn't seen 41.5 since the beginning of the year. Okay? And she even blew past it. She went from 37 all the way up to 42. Okay? So we want to see, is this thing going to give us 41.5 by the end of Friday? Okay, and what I want to do, like I said, 50 contracts, so let's do this. Booyah, there we go. Now, that's one trade. So as long as the stock stays above 41.5, so let me break it down for you. Yep, it just got filled at 36 cents. All right, so if the stock goes up, we make 41%. If the stock doesn't move at all, if it stays where it is at 41.77, we're going to make the 41%. If the stock goes down, it can go down all the way to 41.50. If it goes any bit lower, that, well, wait a minute, where was my break even on that one? Okay, my break even is 41.36. Let's get out of there. All right, 41.36 is way down here. All right, see that? That's where the break even. Now this stock hasn't gone down there since the beginning of the year. It's been trading in this range, and this is the first time it went below that range. So yeah, I have two positions. Let's open this up. STX. View. All right. So I have two positions. $41 and $41.5, and then the $41.42. So as long as this thing stays above 42, I'm going to make my 40 some odd percent on this one here. And as long as it stays above 41.5, I'm going to make my 41% here. So it's not that bad of a movement. STX, we seem to be $1,700 into the positive at this moment in time. Okay, so that's where we are, Pumpkin. Let's move on to the next company. Halliburton. Now, Halliburton, let's open it up over here. HAL is a defense contractor. Now, Halliburton starts out the year in a trading range between 41 and 46. Okay, right around September, October, right around where the president gets elected, she jumps from 43 and continues all the way up to make a high of the year, right in the beginning of the end of January at 58. And then she drops back down. I don't know, is that profit taking? She goes from here all the way up to 58. Now she's back down in the 48, 46, 48 area. It could be profit taking. It's a nice profit. Anyway, we ended up we're doing a spread last week or week before. I don't know, I did so many trades, it's hard to remember them all. We did a spread a couple of weeks ago on Halliburton because it's half their dividend coming up. Now Halliburton went below our range. So we ended up buying 5,000 shares of Halliburton on the 3rd. Okay, so that was last week. All right, so last Monday, Tuesday, we did a position which was the 45, 45.5, and the thing dropped below 45.5. So what we did, we bought back the 45.5 and ended up owning 5,000 shares at 45. Okay, so yesterday it opened up. Where was it? Okay, she opened up at 44.77. I jumped in halfway during the day and ended up selling, the 50 contracts at the 45.5. Because what happened was the stock went above 45. It would then allowed me to sell the 45.5 spread, 45.5 call. So it's kind of like a covered call because I own the 5,000 shares, sell the 50 contracts, someone buy it from me for 50 cents more than I paid for it, and I collected 45 cents per share. Okay, so you take the 45 cents per share and you multiply it by the 5,000. It was somewhere around $2,200 yesterday. So yesterday we made $2,200 on giving someone the privilege of buying it for a little bit more than we paid for it. So it's kind of like a covered call move, and If it does so, we get the extra 50 cents. So we get the 45 cents, which was the, you just do it so long, some of the names and numbers just get stuck in your head. It's like it's right there. What is it? Premium. Thank you. All right, so we collected the 45-cent premium to give someone the ability to buy it from us at 45.5. So whoever bought it, right now she's at 46. So they're buying it from me at 45.5. I get the 45.5, which is 50 cents more than what I paid for it. See, 45.5, 50 cents more than what I paid for it, and I collect the 45-cent premium. So in actuality, I bought it at 45 and I'm selling it at 45.95. So I collect 95 cents per share, which is a tad bit under a $5,000 profit on Halliburton for 2 weeks. Not bad. But I had to put $113,000 in order to do that. Okay, so that's Halliburton. Well, she's at 46. Let's take a look at what's going on with Halliburton. We still got $24,000 to play with, so we can do some more damage with Halliburton. Okay, she's at 46 now. Now we could do this one right here. Or how about this one, the 40.45? As long as she stays above 40.45, I could collect 20%. I can do that for 3 days. Halliburton, why not? So let's give it a try. Let's do just 20 contracts. Okay, 20 contracts is not a lot. It's only $780, but I can make 25%. All right, let's get out of that. Now, I'm letting you know this now. This is not a wise thing for me to do, but I'm confident that I should be doing. Now, let me explain to you why I don't think it's a good thing to do. If this thing drops below 45.5, I might have to buy 5,000 shares again. Now, the first 5,000 shares cost me 113, and as you can see, I don't have 113 to buy another 5,000 shares. So let's hope that it stays above the 45.5. Okay, here's the call right here. It is a spread. So it's a vertical spread, 50 contracts of Halliburton, 100 weeklies, which is the 9th of June, 2017. The 40-45 call spread at 39 cents. The maximum I can make is $550, which is more than 25% of this. Now, this is just for 3 days. Thursday, Friday, Wednesday, Thursday, Friday. So as long as this thing stays above 45.5, I'm going to make over 25% in 3 days. Now, the stock can go up. We make the 25%. The stock can go down, but only go down to 45.39. That's my break even. Okay? So it can go up, sideways, and stay the same. Wait a minute, up, stay the same, sideways, or go down a little bit. Just a little bit. And we can make 25%. And there we go, filled already. That's gotta love it. Okay, let's get back here. And the last one we're looking at is CBI. As you can see, CBI, we lost money on CBI. Well, we're $3,000 in the hole, which is down 10%. That's not good. So let's find out what's going on there. CBI, which is Chicago Iron, isn't it? Okay. Now, Chicago Iron started out the year at 38, kind of all over the place for a little bit. She found some support in November at 26. Okay. And then October, end of October. Ooh, excuse me. She jumps up a little bit, goes sideways in the 33 area, drops back down to the 30 area, and then for some strange reason, right around May 8th, she dropped from 29 down to 17, which is where she is today. So where are we with Chicago Iron? Chicago Iron Works. Whatever, I don't know who they are. I don't even know what they do. They do ironworks. I'm sure that's steel or some sort. Okay, we have the 18-19 call spread, which means she's got to stay above 19 for us to make money. Yesterday, I was pretty confident that this was the new base. Okay, she got the doji here going sideways for about a week. I was pretty confident that this was the base at 19. She opened up at 1911 and the low of 1889. So I was kind of hoping it'd stay above 19 for the rest of the week, but for some strange reason she drops below, and then this is where we are now. So I am losing $3,000 on this one. Okay, making it here, losing it there, and here's my other one. So I make $1,700 for the week if everything stays the same. So we're gonna take a better look at this come Thursday and Friday. Friday just before the market closes, because the market's getting ready to close now. And basically, let's check and see if we have any questions before we jump on out of here. No questions. All right. All right, so that's it for the moment. There's not much we can do about CBI. Look at the trades. Okay, we have 50 contracts, 18-19 spread. So it's a dollar spread between the two, and we're hoping she stays above the 19. So we want her to get back up to the positive area by the end of Friday, because right now we are out $3,100. And that all happened today. Look at that. Not much from yesterday. So this is James from Dividend Stock Talk. We're going to check out and check out that one also. All right, this is James. We will catch you later. Happy trading. We'll catch you on